Have you ever wondered how you could multiply your money? Do you want to start investing but don't know where to begin? Can you imagine what it would be like to create your own retirement? In today's video, you will discover 8 compound capitalization assets that will provide you with a solid foundation for your investment portfolio. Get ready to learn how to generate long-term wealth through smart investing. Before we get into today's video looking at the 8 compound capitalization assets, let's start by defining what an asset is, what a liability is, and how to differentiate them. Assets. An asset refers to any resource controlled by an entity as a result of past events and from which future economic benefits are expected. In other words, an asset is something that has economic value and is expected to generate income or benefits in the future. Assets can be tangible, such as properties, land, equipment, inventories, cash, and negotiable securities, or intangible, such as patents, trademarks, copyrights, and goodwill. They can also be financial assets, such as stocks, bonds, and accounts receivable. In summary, assets represent the resources that an entity owns and can use to generate income, whether in the short or long term. Liabilities. A financial liability is a financial obligation that an entity has to another party and that is expected to result in an outflow of economic resources in the future. Essentially, a financial liability represents a debt or financial obligation that the entity must fulfill. Financial liabilities may include bank loans, issued bonds, accounts payable to suppliers, taxes payable, accrued interest, among others. These can be classified as current liabilities, which are those expected to be settled in the short term, generally within a year, or non-current liabilities, which are those that will be settled over a longer period, generally more than a year. In summary, a financial liability represents a financial obligation of an entity to another party and is expected to result in an outflow of economic resources in the future. As Robert Kiyosaki tells us in his book Rich Dad Poor Dad, and to put it in simple terms, an asset is anything that puts money in your pocket. In other words, assets are those goods that generate income or appreciation of value over time. While a liability is anything that takes money out of your pocket. These are the financial commitments that generate expenses or losses. And yes, your home mortgage is a liability. This is why Kiyosaki emphasizes the importance of acquiring assets that generate passive income and minimizing the acquisition of financial liabilities that consume your income. His perspective focuses on building assets that work for you and provide you with income, rather than falling into the trap of accumulating liabilities that force you to work to pay them off. If you're enjoying this video and want to support the channel, give it a like and subscribe for more content like this. And if you're going to start reducing your liabilities and increasing your assets and are really committed to doing so, comment the word asset in the comments. Now, let's introduce you to the 8 compound capitalization assets that will provide you with a solid foundation for your investment portfolio and give you long-term financial security. Obviously, remember that in order to start growing any of these 8 assets, the most important first step is to reduce your liabilities. Increase savings, and with that saved money invested in some of these 8 assets or others that generate capital returns. So, let's start with the 8 assets. Stocks of solid companies. Stocks of solid companies offer an excellent opportunity to capitalize on long-term growth. Look for companies with a proven track record of success, solid financial fundamentals, and a competent management team. In addition, try to look for those companies that, in addition to having the possibility that the specific action appreciates, pay assets regularly. Indexed investment funds. Indexed investment funds are an efficient and diversified way to invest in the stock market. They closely follow a specific stock index and offer broad exposure to a variety of companies, reducing risk and maximizing long-term return potential. In this type of asset, you can select the risk you want according to your personality, and with this, you will have a potential associated benefit. Here you have to do a job of finding which of these funds fits you best, as there are many. So you have to find the fund that you like the most according to the assets it invests in. The best ones are usually those that invest in the S&P 500 and in the Nasdaq. Government bonds. Government bonds are fixed income assets issued by government entities. They offer regular interest payments and are considered a safe and stable investment, ideal for preserving capital and generating passive income in the long term. This asset can be one of the safest, however, it is the one with the lowest return on investment. Real estate. Investing in real estate, either through the purchase of physical properties or through real estate investment funds, REITs, provides an excellent opportunity for capital growth and long-term income generation. Real estate tends to appreciate over time and offers the possibility of passive income through rentals. This is one of the best options as it is a business that has existed since always and will always exist since we all need a roof over our heads. Commodities. Commodities, such as gold, silver, and oil, are tangible assets that can provide protection against inflation and diversify an investment portfolio. Investing in commodities can provide attractive returns in the long term and act as a hedge against market volatility. Pension funds. Pension funds are professionally managed investment vehicles that offer exposure to a diversified portfolio of assets, including stocks, bonds, and other financial instruments. They are an excellent option for long-term savings and wealth accumulation for retirement. Cryptocurrencies. Cryptocurrencies, such as Bitcoin and Ethereum, represent an emerging asset class with significant long-term growth potential. While they are volatile and can be risky, many people have managed to generate substantial profits by investing in cryptocurrencies. In addition, cryptocurrencies have the possibility of staking. This is that each cryptocurrency pays a certain percentage, as if they were dividends to people who have the cryptocurrency in question and activate this function. This way you can earn with the appreciation of the currency and through these dividends. Education and personal development. Education and personal development are intangible assets that can generate significant long-term returns. Investing in your own education, skills, and knowledge prepares you to take advantage of financial opportunities and improve your ability to make informed investment decisions. In summary, an asset represents resources expected to generate future economic benefits, while a financial liability is an obligation that will result in an outflow of economic resources in the future. Robert Kiyosaki emphasizes the importance of acquiring assets that generate passive income and minimizing the accumulation of financial liabilities that consume income. As you have seen above, these assets include stocks of solid companies, indexed investment funds, real estate, government bonds, commodities, pension funds, cryptocurrencies, and investment in education and personal development. By starting to invest in these 8 compound capitalization assets, you will be laying the foundations for building a solid and diversified investment portfolio. Smart long-term investment will allow you to generate wealth and achieve your financial goals. Which of these assets do you find most attractive to start investing in? Share your opinions in the comments and join the conversation about wealth creation through investment. And if you like the video and want to support the channel, give it a like and subscribe for more videos like this. And if you are really committed to reducing your liabilities and increasing savings to invest, comment the word assets in the comments.